So yesterday, Nvidia reported earnings, and there was a lot of things to go over. And I know, especially being retail traders, there's a lot of information. You may not know where to look or what to do. So I boiled down all of their earnings basically into 10 bullet points that you need to know going forward if you are a long investor or just in general you have an interest in Nvidia. So we're going to break these down into 10 little bullet points for you guys, go over what you need to know for each bullet point, and highlight if they were bullish or bearish bullet points. Now, I will say 9 out of 10 were bullish bullet points, pretty solid, with one bear point, which was kind of swept under the rug today, but we'll talk about what that is as we go. Now, the first bullet point, obviously, record revenue achievement, right? Total revenue was $46.7 billion, up 56% year over year and 6% sequentially. So that exceeded outlook, even with a $4 billion decline in H20 revenue, which is crazy to me. Data center segment drove the growth with 41.1% billion. That in itself is up 56% year over year. Obviously, that reflects strong demand for AI across multiple platforms. Now, that is obviously a bull point. Here's your only bear bullet point for Nvidia earnings, at least in my opinion, is China sales uncertainty. There were no H20 sales to China in quarter two, which led up to a $4 billion decline, which I kind of just alluded to in the last bullet point. Now, if this issue is resolved, there's a potential there for another $2 to $5 billion in Q3, which would be great. But what I like and what they did going forward, they excluded this from guidance for geopolitical reasons, which I think is extremely smart. So now they're not including that in their guidance. So if you're a bull on Nvidia, that could lead to a good surprise, right? Extra money if they resolve it. And if not, they're just pretending like it's not even there, meaning it's not going to be a negative necessarily. It can only really be a positive because they're not including it in their guidance. They're not saying we're going to think that this is going to be included with our potential going forward. It's just not there. And if it happens, which is great ultimately. But that's your near-term bearishness on Nvidia. Now, all the other bullet points I'm going to list for you are bullish bullet points. They blew it out of the water. An EPS beat. Non-GAAP diluted EPS was $1.05. That was up 54% year over year, which beat the analyst estimates of $1.02. So 3-cent beat there. And your GAAP net income surged $26.4 billion, up 59% year over year, obviously supported by gross margins and operational efficiency, which they're doing a little bit better job at, which is fantastic. Gross margin expansion is your next bull point. So we just alluded to how they beat expectations with the EPS. In general, their gross margin is also doing fairly well. So if you don't know the difference, gross is before all the fun stuff you take out of it. Gross is before you take all the bad stuff out of it. Your net is what your take-home pay is ultimately. So just looking at gross margin in general, basically how much money they're able to pull in, improved 72.4%. That's 11.9 points sequentially due to mainly like a favorable product mix and about $180 million in H20 revenue inventory release. Now, non-GAAP gross margin reached 72.7%, which positions the company for mid 70% margins by year end, especially as Blackwell ramps up, which I'll talk about here in a second. Now, obviously, the market's forward-looking, so you want to be aware of their guidance. And that's actually another bull point from their earnings report, their strong quarter three guidance. They projected revenue of $54 billion, plus or minus 2%, which indicates roughly around a 16% sequential growth without assuming those H20 shipments from China. Remember, I just spoke about that. So we're assuming that that's not even included in this evaluation, or at least in this forward guidance. Expected non-GAAP gross margins of 73.5%. It reflects the confidence, in my opinion, of Blackwell production and in general of AI infrastructure demand. Another point we're going to talk about here coming up. Now, we just spoke about Blackwell a few times, but the Blackwell platform ramp is something else that I saw during both their earnings and their conference call as something that can be a more bullish point. Blackwell revenue grew 17% to record levels with the GB300 production shipments starting and full production is now underway roughly at around 1,000 racks per week. The other point you want to note is that Blackwell Ultra also generated tens of billions of revenue in general as this continues to ramp up. This is what's driving a lot of revenue for the NVIDIA, at least in my opinion, longer term. So you want to keep an eye on Blackwell in general if you are an NVIDIA investor. Now, there's smaller segments I have listed here as well, which also performed really well. So they had their network revenue. It's smaller. It's still $7.3 billion, up 98% year over year and 46% sequentially. That's driven by Spectrum Ethernet exceeding $10 billion in its annualized run rate, which is pretty fantastic. On top of that, another bullet point here are all the other segments. So we have sovereign AI growth, gaming, and automotive. We'll go through them one by one. So your sovereign AI growth, this is interesting because they expected over 20 billion in sovereign AI revenue this year, which is more than double last year. So a lot of growth here in general by global investments. The one thing that highlighted that caught my eye was the EU's 20 billion euro for AI factories. Obviously, Nvidia is going to really take advantage of that. Other projects like the UK's AI supercomputer, they mentioned that, can highlight how Nvidia is going to play a role not just in companies but in government, which is really interesting. Like, this company can really get its tentacles kind of in everything at this point. Looking at their other segments, gaming did pretty solid as well. 4.3 billion, up 49% year over year and 14% sequentially, driven by Blackwell GeForce GPUs and the RTX 5060 shipments. I'm a gamer. A lot of you play games or whatever. What I like about them is these chips are pretty solid for a long period of time too. I'm not someone who needs to update my rig all the time, but some people are like that. There's a whole secondary market for NVIDIA chips as well, where people are just upgrading to the newest chip, and there's a lot of people who just want the newest chip. So that demand still seems pretty healthy, up 49% year after year is really interesting to me. What I would find more interesting is when we get the new consoles that come out, if they are new consoles or if they're just going to end up being computers from both like Xbox and PlayStation, if they end up getting custom chips from Nvidia. So that's a little area in which that could be interesting to me as a potential growth area. But even knowing that, this business in itself right now is $4.3 billion. That's a big business on its own. But when you compare that to the rest of their business, right, that is like 10% of their total income, right? To the 10% of their total revenue. It's still big, but it's not even the whole picture. It's just a tiny piece in the whole grand scheme of things, which is crazy when you think about it. Lastly, their automotive revenue. This is where offers the most potential growth, in my opinion, and I think a lot of people are sleeping on it. So their automotive revenue reached 586 million, which is up 69% year after year. This is the only one that doesn't have a B in it. This is million, right? As we get more robotics and smart cars and all this other kind of stuff, there could be a rise of physical demand in AI, right? Of more interacting with like tangible hardware, right? Something like getting more NVIDIA chips into vehicles wouldn't really surprise me. Having more vehicles on the road that are Tesla-esque, I guess you could say, longer term wouldn't surprise me. I think this area of their business is undervalued at its current point in time, with it being such a tiny fraction, basically 1% of their business. But the potential there is very big in my opinion. So that's something, as long as we're driving cars, I think that is one part of their business model that is really kind of undervalued at this point in time. So overall, we're going to summarize what we have here from their earnings, and then two other things that just came out that I want to highlight to you guys. That way you're aware of it off the back of their earnings. So ultimately, obviously, these Q2 earnings demonstrated robust demand for AI. Record revenue, margins, all exceeded expectations, even despite the China headwind. So even though we had that China news there, that was the only bear point, everything else blew it out of the water. The strong guidance and the Blackwell ramp shows that there's continued momentum into the following quarter, which is something you want to see. Now, here's what you want to watch going forward. And then we have updated news and one last talking point I want to talk about. Going forward, the key items you want to look for next quarter is the ramp rates of the new Blackwell products and that resolution of that China licensing deal, that China issue, right? Which again could potentially unlock $2 to $5 billion more in sales, which again they've excluded from their guidance. So there is more money there to put into perspective, again, their gaming revenue is 4.3 billion. This one China deal could usurp their entire gaming business as a whole. That's how big that is, potentially, that one deal. So that's what you really want to keep an eye on going forward, and how potentially new AI models could drive further data spending. Now, as early as this morning, so this is the next morning after Nvidia reported earnings, Nvidia is now in talks with the White House for permission to sell Blackwell chips to China. And Nvidia would offer the U.S. government a cut of Blackwell sales in order to secure the deal. So they're already rolling the ball in this direction. Now, obviously, they know it's an area in which they can make money. And if the government can make money, then they're going to want to take advantage of that as well. So seeing them trying to move the ball in that direction is roughly making Nvidia, again, you have that 10% buffer. If it is a $5 billion sale, essentially, and again, their whole revenue was whatever it was, 50 billion or 70 billion. Hold on, I gotta check. Total revenue is 46.7 billion. So you're talking about roughly 10% more evaluation on Nvidia here from this one deal. That is I only want to say it's a hidden gem within Nvidia right now, but it is a stronger possibility of it performing really well. With that being said, if they get this deal underway, I don't think it would be short-sighted to think that we see Nvidia tap $200 by the end of the year, especially if we get that deal. Actually, I would say even sooner, probably by the end of October, if they can line up this China deal, and off the hype alone, I would see a sharp appreciation in Nvidia's share price. Now, before I let you go, I want to leave you with one part of Nvidia's earnings that can be a level of concern or something you want to be a little safe with. 85% of Nvidia's revenue last quarter came from 6 companies. Almost all of its money, right? Almost 85%, so 9 out of 10 almost, of their business came from 6 companies. Those companies, the first company is 23% of the revenue, second company is 16, third was 14, and the preceding 3, 11, 11, and 10. So that is a concern. Here's why. Obviously, these customers more than likely are the other Mag 7 names. Your Google, your Microsoft, your Apple, your Tesla. They're more than likely those customers, right? Okay. That super concentration could be a case of the snake eating its own tail. Well, what do I mean? Well, if we see, and we're making assumptions here that it's Meta or Google or Apple, if we see faltering there with their ability to take advantage of AI, I guess I should say, strike while the iron's hot, right? And grow a business off of it and lower spending, or they realize it's just not worth it anymore, they cut off spending, whatever they do there, it will be a double whammy on the market overall, because it's going to obviously impact Nvidia, but it's obviously going to impact, it's obviously going to impact the individual name, whether it's Apple, Meta, whatever, but then it's also going to hit Nvidia. So if you're someone invested in the stock market as a whole, you understand that the Mag 7 is roughly, whatever it is, 30+% of the SPY, right? So in the event that something like that does happen, some sort of news like that does happen, you're going to have downside to that one specific name. Even if it's one name that says that downside, you have downside to that one specific name, and then downside to Nvidia because they're theoretically losing a customer. If they lose one of these customers, they're losing 10% of their revenue. So that's roughly, what's that, 4 to, depending on how you're looking at it, $4 to $5 billion, depending on which customer they lose. If they lose their biggest customer, that's 10 billion to, 10 to 12 billion dollars. If, again, cutting off all ties completely losing the customer, which is a worst case scenario. But just keep that in the back of your mind as you trade, or if you are long Nvidia, because that is a real risk longer term to Nvidia. However, I will say, based on these earnings and based how it's sitting, I don't want to leave you with a fearmonger statement. Nvidia is very strong here. They continue to be strong. And as long as that AI demand keeps up, I think Nvidia is actually positioned itself very, very, very well into the near future here to hit at least $200 before the year end. In my opinion, it will hit that before the end of October. However, I would look for a catalyst to get it there. And in this case, I would look for that China licensing deal to push it there, push it in that direction before their next earnings report. Let me know what you think down in the comments below.